So US inflation, interesting. Prior to this morning, I thought I was going to come on the air today and talk to you about how inflation was starting to heat up again in the United States, which was not good for the stock market. We had been given, or we have seen a lot of economic data over the first 4 months, or sorry, I should say 3 months, first quarter of the year, showing us that inflation was starting to move in the wrong direction. We saw headline CPI, or Canadian Consumer Price Index, a measure of inflation, go from about 3%, 3.1 in the US, all the way up to 3.5%. And, overall, the feeling was that even the producer price index, another number we got this morning, that data was starting to heat up as well over the first quarter of 2024. Retail sales were much higher. We were getting all the signals that even though the Fed, wants to see lower inflation, obviously, we all want to see it, so that hopefully we can get to the point where the US does cut interest rates, and hopefully the Bank of Canada can also look to cut interest rates in the coming months. We just weren't getting those signals from the inflation data. However, that all changed this morning, or at least some of it changed this morning. We actually did get producer price index, so wholesale prices yesterday. They showed a slight tick up in PPI, or producer price index, or wholesale prices, so that wasn't good. But today we received some good CPI data, consumer price index data, and that showed for the first time this year that things started to tick down a little bit. We went from a 3.5% reading to 3.4 on the core number, which takes away volatile energy and food prices. We saw a number 3.8 fall down to 3.6. So finally, we started to see inflation move in the right direction, albeit just a small move, but a move nonetheless. And prior to this, we were starting to get a little concerned because we started to see growth overall slow down, growth in jobs slowing, growth in overall GDP numbers slowing. We're hearing the consumer starting to slow down, but yet inflation remained high. And whenever you have slow growth with high inflation, people start to talk quickly about the word stagflation, a stagnant economy with high inflation. And I know Jerome Powell, head of the Federal Reserve, recently said we don't have stagflation. We're nowhere near stagflation as yet. And I agree to a certain degree. Last time we saw stagflation, we saw a lot higher inflation and a lot higher interest rates as well, and much slower growth back in the 70s when we did see stagflation. So we're nowhere near that. So the talk about stagflation was quickly squashed by the Fed and said we're nowhere near a stagflation type of scenario. But nonetheless, slower growth, higher inflation. Hopefully today is the first time that we, as I said, we saw CPI, or inflation numbers, starting to come down. Hopefully it's the start of a bit of a trend. As always, we have some really good charts to show you. Our first chart shows you PPI, producer price, or wholesale prices. You can see here that wholesale prices, total wholesale prices, or PPI, 2.3%. And you can see it actually coming up on the far right-hand side of the chart there. You can see that the 3.4 number, 3.4% number, is when you factor out, again, volatile food and energy and trade services. You would see here that also PPI has started to tick higher. And that, I guess, in some ways made people nervous yesterday when we got those numbers. And again, hearing that PPI has started to tick up a little bit. The next chart we have is consumer price index, another different measure of inflation. And you can see here, right, hot off the press, our great individuals that work here, getting the latest numbers on our charts from just this morning. 3.6% on core, which you can see here is the more faint line, and then 3.4 is the headline number. So once again, this morning, good economic data showing that inflation is starting to fall. The other thing we received this morning was a number on retail sales. Now, prior to this reading, we've seen pretty strong retail sales right across the board, but we've been starting to hear from certain companies that the consumer isn't doing as well as we thought. And we're just starting to get some of those numbers in the data. And we have retail sales numbers, a chart on that. And you can see here that retail sales, the last reading we received just this morning, again, great up-to-date chart, is basically flat. So those two big gains that we saw in February, March, now flat. Interesting, because we're now, that is starting, that data that we're seeing in front of us right now is starting to match with some of these retail companies are telling us, whether it's an Amazon, whether it's a Starbucks, a McDonald's in the food industry, whether it's a clothing company, or whether it's a company that sells everything like Canadian Tire, for example. They're all telling us that, yes, the consumer is still spending, but spending a lot less and looking for bargains. So retail sales falling quite a bit as well. Next chart that we're seeing that we have is US GDP, or I like to call GDP, gross domestic product, US growth. And what you're seeing here is that those pink bars, you can see on the right-hand side, a nice from the top left moving down to the bottom right, as we see GDP or growth slowing down to 1.6. And the faded bars to the right of it, you're really starting to see are the gray bars, approximately what the expectation is for the rest of 2024. So you're seeing that between 1.5% and 2% is the expectation for the growth rate in the US for 2024. Next chart we have jobs. And as I mentioned a couple of Fridays ago, we saw a disappointing jobs number, 175,000 jobs created. Once again, if you look at the data from about December, so the bar just before January, and if you take a line going from December, it's a pretty much top left to, again, bottom right, a straight line, almost diagonally down, with the exception of the March number, which is kind of an outlier, I believe. You're seeing jobs growth decline. We're still seeing jobs growth, but definitely declining. And so overall, what that tells me is that finally, we're starting to see inflation, the inflation data that we were hopefully expecting to see with today's number that we got out of CPI. Hopefully, a little later on, when we get the PCE number, consumption and expenditures number, the number that the Fed looks at more closely, even more so than the CPI, we're going to see inflation coming down as well there. And so hopefully that will start to match what we're seeing overall, which is a slowdown with the consumer, slowdown overall in the economy. And again, hopefully we can see inflation numbers coming down, I guess, over the next few quarters.